What's up, everyone? All right, well, here we are, end of the week. What a week. It's been crazy. If you added up all of my winners from the week and then all of the losers side by side, we'd be looking at two really big numbers. And the net profit, probably only about $7,500, maybe $8,000. I don't have a lot to show for this week. I made $11,000 on Monday, which was great. Tuesday, Wednesday, Thursday, and Friday. It's been choppy, and I've been over trading. I've been going red, trying to bounce back. There's been lots of opportunities, and I felt like I should trade more than I typically would to try to make back some of the losses from earlier in the month. But it feels like mostly I'm spinning my wheels and just treading water. One win here, or maybe three small wins, then one big loss. Then three more small wins, then one big loss. The only person who wins from all that is the broker who I pay commissions to, and the exchange who gets money on the ECN fees. But I'm just kind of spinning my wheels doing that type of trading. And even today, I was up $3,000, and instead of walking away, I felt like, well, listen, you're up $3,000, you're having a good day. Let's keep going. You really should. You're behind the ball on the month. You gotta put in that extra hour. And so I did that, and I ended up losing, $2,400, and I'm up only $600. So once again, over trading a little bit, and it's really hard when you have that feeling of being behind the ball and need to play catch up. And a lot of beginner traders have it. I have it right now, just because in the context of the last 3 weeks, I had a red week that was really big red, 6 red days, and then right now I'm still trying to bounce out from that. I'm not all the way out yet. So I have it within this sort of short time frame. Although beginner traders often have it because their first month or 2 months or 6 months or year is red. And so they're constantly in that place. And I know I was when I was getting started I've got to make back the losses. I'm in the red. I've got to sit here for 6 hours and watch the markets, because if I only trade for an hour, what am I going to do for the rest of the day? Watch TV? That feels like a total disservice. I don't feel like I should be doing that. I should be sitting here trading. In fact, sometimes the absolute best thing you can do is walk away. Today's a great example, because after I was up 3,000, I was like, well, I'll just dip my toe in the water with the VIX on a reversal with 200 shares. It's 200 shares, it's no big deal. I jump in with 200 and then double it to 400. I end up losing $200 on it. So then I'm only up 2,800. And I'm like, all right, well, I'll keep watching the VIX. It sells off, and then as it starts to bounce a second time, I increase my share size from 200 to 300. But I press the buy button 3 times. So then I had 900 shares. It pops up, I'm up like $100. I don't sell it, it drops 50 cents. I'm down $450. And I say, you know what? I'm just going to add down here, because I think the market is topping out, and I think it is about to roll over. I think it's going to do a false breakout at the open price. So I added a little bit more, and then the market squeezed through the highs, and I was down $1,800 on VIX. And then at that point, I was like, okay, I'm up only 1,100 on the day. I really, really, really should stop. But I would like to get back to up 3,000. And then BLPH started to break out one more time, and I jumped in it. And when I was up $2 a share, I didn't take any of it off the table. I said, no, I'm going to hold this and let it ride. And then it stopped me out for a loss, and then I was up only 600. So it's just so typical that when you get into that mindset of trying to compensate for losses, make back money, that you trade differently. You don't trade as well. You take risk differently. You're more aggressive at the wrong spots. And this week, on several days, I've just shut off the chat room and been like, okay, well, I traded small caps this morning. I'm down this amount. I'm going to spend the rest of the day trading the S&P 500. It's not within my strategy, but it's not within the strategies I teach. I'm just going to trade on my own and see if I can make back that money, because I don't like personally being red. I don't like being red right now. I want to be green. So I'll I'll trade whatever moves, and I'll apply my strategy to that and dust off my reversal trading strategy and see where it gets me. And I mean, I've made some money on a couple of the days, and today I gave back some money, and I just generally feel like I'm in a place with my own trading where I'm not super grounded because of holding on to that baggage of I'm not where I want to be on the month or the week, or I'm not happy because I had a couple of really bad trades that, you know, I'm now trying to dig myself out of. And so each day when I come into the market, I'm bringing that with me. And I trade my very best when my P&L is at all-time highs and I don't have any of that baggage. I'm just like, I'm trading great. You know, I'm trading really well. I'm making good money. I'm buying pullbacks. It's working. I don't have to be super aggressive. I'm already at all-time highs. There's no reason to be overly aggressive. And so that's those stretches where I have really long equity curve where I'm really, you know, putting the pedal to the metal. I'm at all-time highs basically the whole time. I might have a red day here and there, but they're small and I bounce right back. When things get difficult for me is when I have a period of 2 or 3 red days. And now I've dug myself a little bit of a hole. And now I need to kind of pivot from what I usually do and be more defensive because I can't keep going red. And that happened in the beginning of March, where I had an unprecedented 6 consecutive red days, which has never happened to me. It was crazy. I followed that with 7 green days, but that whole time I was carrying the baggage of 6 red days. Now I need 6 green days, 12 green days. You know, this is how much I need to make back. And until I'm back at all-time highs, it's hard for me to really fully let go of that. So what's interesting is that this market is kind of forcing me to, you know, really head on deal with this issue that I have about it's not okay to have a day where I'm red, even a single day. And that it's not okay to have a week where I'm red, and it's not okay to have a bad couple of weeks or a bad month. When in the bigger picture, the grand scheme of things as a trader, the markets go up and down and your P&L will go up and down, generally up. And that has been the case, but there'll be small periods where you have pullback before the next move up. And being able to trade through that period without getting shaken and knocked off your center is something that really comes probably more than anything from within. All right, so we're going to do our midday market recap here, go over the trades from this morning. Right now, the S&P 500 is kind of coming into this little resistance line here. Today was a okay day. Green is good. Not a great day, though. I had some nice profit on BLPH, and I gave it back on VIX, trying to do a couple of early bottom bounces. I tried a bottom bounce right here. Oops. Let's see. Right down here, which did bounce, but not to my target. So I took a loss. And then I tried again just a moment later, and again here. You know, and I got a couple wins, but then I kept getting stopped out, and I lost more than I made. So that was a little frustrating because then, oh, we got that bounce there. So, you know, that's part of trading. Usually I like to say that if I can be in the right place at the right time, that I'll be able to, you know, give it a couple of tries and I should be able to get back in. But if I'm too aggressive, then what ends up happening is I lose more than I feel I can afford to lose, and I can't keep taking stabs. And that's what happened. You know, I had a couple losses, and then I was like, all right, well, at this point, I've given back too much of my profit, and I really can't take any more trades. So that's discouraging. But, you know, the current market right now is very choppy. And honestly, I should have walked away when I was up on BLPH. My only trades on this, I got in right here for the break over $22. It squeezed up to a halt at $22.79. I sold going into the halt up over $1 a share, holding 300 shares. On resumption, it halted going down. I was still holding 300 shares. It halted going down a second time. I was still holding 300 shares. And then right here, as it hit the low, I bought 1,200 shares. And let's see, where was this? It was right, I gotta go back a little ways. What time was this? This is a little past 10 a.m., so it's right down here. I got in at 16.79, which was right here for the break over 17, and it squeezed up to a high of 18.70, $2 a share. And so with the 300 shares, I was down from my entry at 22. I was down on with 300 shares like $5 a share, right? So I was down $1,300. But I wish that I had cut that sooner, but it didn't change the fact that the bottom bounce was a good setup. So I took the bottom bounce with 1,000 shares, which I would have taken regardless of whether I had had that whether or not I was still holding 300 shares. And that one ended up being a nice trade. So it wasn't as nice as if I had not still been holding 300 shares from 22, but it was still good. So that put me up actually 3,000 on the stock. And then I got back in, and where I got back in was right here. Let me move this, right here. So I got back in actually at 22, same price actually, right back in at 22. It squeezed up to 21, squeezed up to a high of 22.89 and got halted. On resumption, it hit a high of 23.90 and I didn't sell any of it. Now I thought if this thing breaks over 24, that whole dollar psychological resistance, 25, 26, we may see a move back to the highs. So I ended up stopping out, losing 600 bucks, and with that, I'm up only 2,300 on BLPH. So the way my day went today, I started with my first trade on BLPH, $1,000 of profit. My second trade was actually on SPXL, and I lost 55, but then I had another trade on it later that I made 200 on. And then my third trade was getting back in BLPH right here, and then first making money, selling some of it up here, and then holding 300 shares down to the halt, adding 1,000 or 1,200 off the low, selling on the move back up. So then I was up 3,000 on the day. A quick loss on Works, hit the high day Momo scanner and didn't continue. And then on VIX, I gave back a little more than half of what I had made on the day. And I was up first on VIX. I was like, I'll just take a trade with 200 shares. I'm already up 3,000 on the day. There's no reason for me to push my luck. I'll just take 200. Was it 200 or 300? Let me go back and check. My first trade on VIX was 200 shares. All right, so my first trade was 200 shares, and I stopped out as it flushed back down here, and I lost like 100 bucks. So I was like, man, that sucks. All right, well, that's not that bad. Then when it came back up for a second bounce, I was like, okay, this time I really think it's gonna bounce. I bought 400 shares. Lost again. Now I was down about 400 on VIX. So now I was up only 2,500. And I was like, okay, that's annoying, but I still think it's gonna work. So then on the last attempt, wherever that was, I took 900 shares, and then I lost like $1,000. I mean, you can see how volatile VIX is. We're talking about a range from $63 down to 53. The bounce here from 53 back up to 60. This is some serious momentum. I mean, this thing rips. But when it goes the wrong way, it's not fun. And so then I was like, I was up only 1,500. And I had one more trade on VIX, and then I was up only 1,100. And I was like, okay, I really should stop now. And then I took the last trade on BLPH and lost, you know, whatever I lost there. So it's so funny how initially, oh, I'm just going to take a trade with 200 shares, and then I lose. And then I'm like, well, okay, I'm going to go back in now with 400. And then I lose again. And I'm like, all right, I'm going to go back in with 900. And then I lose a third time. And all of a sudden, it's like, wow, now I'm up only 1,500 on the day. I was up $3,000. All right, well, BLPH looks strong. You know, okay, I'll jump in that. And then, all right, it looks good. I'm going to try to just hold it for a second because I've only got a couple hundred shares, whatever it was, 400 or 600. I'm going to just see if this opens up, because if it does, I might be able to get $3 or $4 a share. And then stopped out. It's crazy how that happens. And I talked about this a little bit during my pre-market watch list, but I'll go over it again now. So this was my day. Let's see. Let me go gross. So this was my day yesterday. Started red, down like 1,800. Came back up for a second, and then was down 9,000. Spent the whole morning digging myself out of the hole to get to down about $150. And then, boom, back to down 7,000. Bounced up, back down. Bounced up, back down, now down 8,000. And then from about 1:30 in the afternoon until 4 p.m., I made my way back up. It was a lot of trading. It was exhausting. At the end, it wasn't really worth it. My commissions, total commissions, $2,612. I hope I get a good Christmas gift from Lightspeed, because this is ridiculous. But it's my own fault. I took that many trades, plus the ECN fees. So I was up 1,600, but down 1,000 after commissions. Certainly better than being down 9,000. No question about that. But I should have stopped, you know, right here. I should have just cut it right here, and then I went for that one trade to get me back to green, and boom, back into the red. We can look at another day, this day here. Green, red, green, red, green, red, green, red. And right here, this is where I was ready to throw my laptop out the window. You know, I was like so frustrated. Because in one trade, I went from up $3,000 to down, and through that, it was like, come on, man, like this is ridiculous. Green, red, green, red, green, red. You're just chopping yourself up here. But I got that last trade and finished the day green. So, you know, that day it worked. This was Tuesday. Green, red, tried to keep trading, never got back to green. And then we've got Monday. Thank goodness for Monday. This is just a beautiful day. 10,000, couple little pullbacks, but just a solid day. And I traded up until 2:30 in the afternoon. So, you know, some days it works, some days it doesn't. This week, I mean, we can see where I'm at on the week. So detailed, this week I'm up, let's see, the gross profit is 14,000, plus today would be 14,700. Net profit, only 7,000. Lightspeed ECN fees are fees paid directly to NASDAQ, to the exchange. That's the price you pay for direct access routing. So that went to the exchange, and this went to Lightspeed. They got $2,288 from me this week. $2,000 a week. It's $100,000 a year just from one trader. You know, think about that for some of these brokers that depend on commissions, like the folks that, you know, E-Trade and Ameritrade that used to have traders like me trading there every single day. That's $100,000, $50,000 a year per trader times 600,000 traders. That's a lot of money that they've lost, and they're going to make it up somewhere. Where will they make it up? Probably on the routing fees, possibly selling order flow, you know, so traders can cut in front of you. And so this money that I spent here, I firmly believe, having traded at some of the brokers that have zero commissions, that if I was trading, if I took all of the same trades at one of those brokers, I would be, I don't even think I would have made 7,000. I'd probably be red on the week, because every time I would have gotten in and gotten out, losing 1 cent for every one of those trades, my average daily volume has been 440,000 shares. So, 440,000 shares. Let's see, 440,000 shares times 0.01. 1 penny better execution price, $4,400 per day. Just from 1 penny better execution price on average for every trade. Think about that. It's not a lot. So that margin can be very, very small when you're trading when you're trading as much as I am. Now, this isn't a really good representation of how I typically trade. If we just go back to, like, I don't know, just let's do a random time here. 1/1/2019, 1/7/2019. Let's just look at 1 week from like a year ago. So this was a, I don't know, 1 week period. No, it's actually only 3 days. So let's add a couple more days on there. See, 7, 8, 9, 10, 11, 12. Okay. All right, so there we've got, I think, a full week on here. So average volume only 66,000 shares. During this period of time, I was just getting in, taking 1 good trade, getting out. One entry, 1 exit. It was much more dialed in. But in the market that we're in, oh, maybe it's this longer stretch. But in any case, average daily volume was what we were really looking at. Taking those base hits 1 trade at a time, and not feeling the need to overtrade, is certainly nicer. But just given, given the fact that we're in a really volatile market, I've been trading a little bit more. Over the last week, I've been trading in the morning. My small cap trades, like on BLPH, those trades for the most part, I'm trading in the chat room. And then I've gone offline off the chat room and been trading the S&P on my own, because the S&P trading that doesn't really fit within the strategies that I currently teach. It's fine to trade it. It's not really a beginner's financial instrument. It's going to be very difficult for most beginners. And so for the most part, I've just been trading that on my own and trying to learn a little bit and see if I can get dialed in on how to trade the S&P. So maybe I can add something to the classes about it. In total, this month, if I pull my reports back up here, let's see, so 3/1/2020, 3/2020. So far this year, or this month, let's see, instrument. So VIX has been my 2nd most profitable instrument. SPXL has also been pretty good, and SPXS has also been pretty good. So I'm kind of getting a little dialed in on trading the VIX and the SPY. Today wasn't great for me on the VIX, but and TVIX was really bad for me. But that was kind of at the beginning of this run when TVIX was back at $89. So it was like way down here. And so in the last week or week and a half, I've gotten a little bit better at kind of getting to know how these trade. So that was one really big loss, which was disappointing. And I haven't traded it again because now it's too expensive. So I switched to VIX. So I guess total trading VIX instruments, I guess right now I'm kind of break even, but I'm trying to learn, trying to get a little bit better. And I think that this market is giving the opportunity, as I've said, if you want to venture a little outside your strategy. Some of you guys would trade that outside your strategy in the simulator. That's a good idea. Some will trade it with real money, like myself. I think one of the problems that I've had is that I've been trying to sort of trade something that's outside my wheelhouse with regular share size because I had such a bad start to the month. I have felt the need to make back those losses. So I felt like, well, I can't really afford to just be trading $200 type of winners on the VIX, I really could use a $2,000 winner. And so then, of course, on the times where I've been wrong, the loss has been, pretty big. Nice sort of bottom here. Look at how this right up to that resistance line there that I had drawn. So this may end up being a short off VWAP. I'm not sure that I would be taking that trade. Let's see. I had another line here from pre-market. But yeah, again, like I said, whether you're trading in the simulator or you're just kind of watching the market and try to get a feel for them, there has been a lot of opportunity. And if you can get good at trading through some of this stuff, it may be something that you can utilize during future periods of volatility. This has been what we've been going through here, has been the most volatility in the market that I've tried to trade through. I suppose probably in my career, although the volatility on individual days hasn't been a lot different than what we had here and here. Really big red days where things are going crazy. Those are days where the VIX is strong, where the SPY is something that you can trade. And you can either say, well, I'm not going to do that. I'm just going to sit out those days, which is fine. You can totally do that. But then when it's an extended period of craziness like we've had here this month, it feels like it is leaving some money on the table to not at least try to see how your current strategy can apply to these types of stocks. So yeah, kind of an interesting month here. We'll see where I finish. This is where I sit today. Really not a lot to show for it, but sometimes trading is just treading water and keeping your head above water, and it's a question of survive till you thrive. So let's see. Let me go back to 1/1/2020. So this has kind of been my year so far. I went red, which was unfortunate. Nice into the green, a sharp pullback, and now I'm kind of working my way back up. It's not the prettiest year that I've had. It's not the prettiest start to a year that I've ever had by any means. If I go back to 2019, you'll see that there's been some bigger dips in the last year than I might really have liked, but there's been a couple of really nice squeezes to the upside when the momentum has been hot. Right through there, right through there, through there. So this was a long period of needing to kind of tread water, and it lasted for like 2 months. But I got through it, got to the other side, momentum opened up. Another period of slow trading, things open up. So this is the way it is for pretty much any trader out there. And unfortunately, it's just not a career where it's reasonable to say that you'll just make the same amount of money every single day consistently. There's going to be ups and downs, but the more you zoom out, this is what you want to see, generally speaking. Sometimes there'll be long periods where it's pretty consistent. Sometimes there'll be long periods where it's fairly choppy, and sometimes there'll be long periods where it's fairly slow. If I can avoid this, again, this long 6-month period, I would rather have this choppiness than this. Because I think I learn more from this type of stuff. This is just sort of exhausting when it's that slow. So that was back in 2017, coming up on 3 years ago. So I think, we're right now in a period where we're definitely seeing a lot of volatility. I think that'll continue to be good for us, and I'll continue to try to capitalize on opportunities and continue to take this time to try to develop some new strategies. That short off the VWAP right there, if that ends up being a nice trade today, then the more times I see that, the more confident I'll get at saying, all right, I'm going to start pulling the trigger on some of these. All right, so that's it for me. I hope you guys all have an awesome weekend, and we'll be back at it first thing on Monday morning. Yes, 3 p.m. Eastern today for Warrior Pro students. We're hosting FOMO Friday. I'll be there. So will Ted, Roberto, Hulk, Selena, and a few others. So it should be a good, really good FOMO Friday today. All right, so I'll see you guys at 3 p.m. You want to learn more about trading? Check out some of the links in my description, and if you have questions, ask them in the comments. I personally respond to every question posted on my channel. And don't forget to subscribe.